Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Masser and Tim Stenivek on Bloomberg Radio.
It was 3 words.
What?
Shut up, Dan.
Oh.
3 words. That's what Elon Musk,
Wow.
the wealthiest person in the world, posted in a message on X. Remember, he's the wealthiest man in the world, in response to a post from the tech analyst Dan Ives. Dan Ives is a global head of technology research at Wedbush Security. He joins us from New York. Dan, I had a viewer send this tweet to me yesterday, the response, Elon telling you to shut up. First of all, you were making 3 recommendations for what you think the company should do. What happened there?
Babe, look, I mean, I knew Elon was not going to be happy, but the reality is, the board, they basically need to now step it up. And I think it's something where, I hear from shareholders around the world, right, on Tesla. And as one of the biggest supporters of Elon and Tesla, it was time to rip the Band-Aid off. You got to now put a new structure. And actually one of them, that we talked about in terms of the 3 things that we suggested is actually something Musk wants in terms of 25% voting rights. And what I view is will ultimately be an XAI merger potentially. But second, third, the political gambles and this sideshow, it can't continue.
Analysts seemed totally fine with Elon Musk, and correct me if I'm wrong, they seemed totally fine with him when he was getting along well with President Trump, and it seemed like the president's policies would favor his companies. Is that fair to say?
That's 100%. I mean, I view it as and we talked about it, the best that ever happened to Musk at that time was Trump getting into the White House. And obviously, you could argue Trump doesn't get into the White House if it's not for Musk. But like a lot of things, it took on a life of its own. Doge, BFFs, spending no time with Tesla, Mar-a-Lago, DC Doge, the brand issues. That ultimately is why then Musk had to take a step back and basically leave the Trump administration. But in your wildest nightmare, no one expected, hey, let's triple down, start a 3rd political party, where now Trump actually becomes a foe, Republican Party becomes a foe. And that just becomes more of an overhang for Tesla.
So the board as it exists now, is this the board that you think can bring about the necessary changes and set the ground rules as you are calling for Tesla? And Jack Hartung, who has been CFO of of Chipotle, excuse me. Kimball Reeve Musk is on it. Jim Murdoch, of course, Elon, Robin Denholm, an Australian business executive, former accountant, chair of the Tesla board. So I'm just trying to think, is this the board that you think can execute the changes that need to be done?
Well, they don't have a choice. Now, look, is this? What
do you mean they don't have a choice?
Because they don't have a choice where sometimes boards, look, if you go back to history of Tesla, let Elon does what he do. You can never argue a bet against them. And that's been the MO, right? That's been the DNA. The problem is that essentially the clock strikes midnight when now it comes to these political ventures and endeavors, as well as the time spent at Tesla. The board, you're not going to have a major change or makeup in a board that would take many years. The board now, as a public company, needs to, new pay package that we talked about in 25% voting shares, but then establish the guardrails because it's a public company and shareholders are demanding, and the stock reflects changes that need to be made.
The board certainly is part of it, but I think a bigger picture question that I have is an existential one about Tesla, Dan, and that's with regard to Chinese competition. And we've seen sales get hammered over the last year, and that really the narrative has been around Musk and his association with politics, whether we're talking about that in the US or about that in Europe. But what about the China factor? Does Tesla have what it takes to compete around the world with Chinese EVs?
They have what it takes with Musk. In other words, like Musk is the biggest asset for Tesla.
But they don't have the products, but they don't have products that compete at those price points and with that tech.
Yeah. So on that point, look, as someone that spends time in China, like competition, BYD, NIO, Xpeng, everything we've seen, clearly it's become much more of a competitive market. I continue to view that Tesla is still a gold standard globally when it comes to EVs. I think when it comes to China, look, the big game right now that they're trying to win, it's not necessarily about deliveries. It's about, can they win the autonomous and robotics future? That is the way you get to 2 trillion, the way you get to $1 trillion incremental valuation because of autonomous is that way.
You know, it's interesting that you say that because one of our producers, Sebastian Escobar, said, hey,
great.
Waymos are coming to my town where I live in, which is just across from Lower Manhattan. And I'm like, wait, what? And Waymo seem to be expanding pretty aggressively. And so it does seem like folks are going after what could be ultimately the future, right, of Tesla. If really autonomous works, I mean, that's where the growth comes, right, going forward for Tesla, in your view?
Sure, but to that point, like, look, Waymos are $200,000 cars. Like, you're essentially in 5-6 cities.
Yeah.
When you think about the scale and scope, Tesla, we're talking about 20-25 cities over the next year when it comes to robotaxi. I mean, that's the whole opportunity. Like, when you think about 20% of what I view as like ride sharing over the next 4 or 5 years is going to be autonomous, no driver. So that's the opportunity that Tesla's going after. But then it goes back to politically, you can have Trump, Duffy, whoever else you want to talk about from administration, not as a friend, but as a foe when you go into the most important chapter of growth and success, what I view on the horizon for Tesla.
Has Elon reached out to you? Have you reached out to him?
I mean, I won't comment there. I would just say that, like, the message has definitely been received by Elon. It's been received by the board. And that was my goal, right? Like, my goal is that sometimes it's like tough love, right?
Yeah.
Like, the point is, like, it comes down to, like, if you don't reprimand or whatever, if you, like, you know, it's like there's good times and bad times. But this is a time, and the stock reflects it, that the board, the adults in the room, whatever you want to talk about, they need to lay the guardrails out for Musk, especially around the political ambition. That is the key.
Dan, how does it feel to have Elon Musk tell you to, in all seriousness, what did it feel like to have him tell you to shut up on his platform? He's got, I don't even know how many followers he has. It has to be over 100 million, hundreds of millions at this point.
I think it's like
220 million followers. How did that feel? I mean, I imagine too, his sort of army came after you as well.
Yeah, but I don't, you know, we know each other well. It's like, I don't worry about that. I mean, to me, I just actually view it more as like, he has his right to an opinion. I disagree. I'm a huge supporter of him and Tesla, but I'm more focused on like it creating dialogue. Like, he'll say, shut up, Dan, and I have 100 memes sent to me about different shut up, Dan stuff. And actually a guy in the street yesterday yelled from New York City across the streets like, shut up, Dan. So that's that's cool. But to me, it's about creating the dialogue, because now it's like, okay, what is the community? What is share? I'm hearing from shareholders all day, right? That's the important thing, what it means for the Tesla story. That's the whole goal.
I wonder, has the board reached out to you and said, hey, thanks, Stan, for that?
Or members of the board?
Assist, yeah.
No, I mean, the good thing is, like, I definitely feel like this message has been received by the board. I think everyone's seen it. And at least now, look, now it comes down to like, okay, are there actions? Like, what does the board do with the next pay package? Remember, the other $56 billion pay package is still in the legal sort of limbo because of Delaware. Proxy still hasn't been, ultimately sent. That's been delayed. So this is a key period of time for the board, for Musk.
Another message that was received for the world of Elon Musk was from the CEO of X, Linda Yaccarino, stepping down as CEO after 2 years. Post on X, decided to step down as CEO. I'll be cheering you all as you continue to change the world. What's your view on that? How do we read that?
I think I have a very positive view of her, right? Yeah. Besides the fact that she's a Penn Stater, we are. But
all right, pull back. Let's
my view is she turned around X. She navigated massive political storm, right? I think very few people could have done. The advertising, I think a lot of it has rebounded. There's still obviously clear headwinds. But I think this is look, it's huge shoes to fill. It is a big hole, her leaving, because she has a unique background because of advertising, because of her personality. I think she got along very well with Musk. So it is a huge, what I view as it's a negative, but now it comes down to who fills that role. Yeah.
Interesting stuff. Listen, we're so glad we could catch up with you.
Thanks for taking the time, Dan.
I'm so glad to be here.
Yeah, we really appreciate it.
I'm so glad to be here and talk. And this is get the popcorn out. A lot of soap operas ahead.
If you want to not be yelled at on the street, Dan, you're gonna have to tone down the wardrobe a little bit and go incognito. And not wear the signature Dan Ives clothes. I don't know if you need to go incognito, but I love it. We love it. Dan Ives, global head of technology research at Wedbush Securities, joining us from New York.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
There's been a lot going on out of the White House when it comes to possible new tariffs and trade deals, or at least progress too. We did have the president unveiling a new round of tariff demand letters earlier today, with levies set to hit in August on imported goods from partners who fail to reach agreements with the U.S. So he said he would levy different rates on various countries. That includes a 30% rate on Algeria, Libya, Iraq, and Sri Lanka, and a 20% rate on goods from the Philippines. So there's a lot going on. And Tim, we've got a great voice to really talk about what is a really important trade relationship, and that has to do with the relationship between United States and Asia overall.
Wendy Cutler is vice president at the Asia Society Policy Institute. She spent nearly 3 decades as a diplomat and negotiator in the office of the U.S. Trade Representative. She also served there as acting deputy USTR. She joins us from Washington, D.C., where she's managing director of the D.C. office. Wendy, thanks for joining us this afternoon. The president postponed the imposition of those April 2nd tariffs to August 1st. We did learn that earlier this week. What is your read on that?
My read is that they weren't ready to announce more deals. And so here we are. Remember, we were expecting 90 deals in 90 days. We have 2 deals that have been announced. And frankly, the deal with Vietnam seems to be still under negotiation. And so these letters have been sent out informing countries of their tariff rates that will come into effect on August 1. And I think we're going to see more letters, but we're certainly seeing more letters than deals.
So
a letter is not a deal, in other words.
A letter is not a deal. You do not want to get a letter if you're a trading partner. It's an honor not to get a letter at this point.
Because what? It's pressure?
No, if you don't get a letter, that at least means that you're negotiating in good faith and that the administration thinks there's a way forward with you. I think with respect to the other countries, it demonstrates that there's a lot of frustration on part of the White House, and they're going to take action against these countries if things don't fall into place over the next 3 weeks.
You know, Wendy, I keep thinking about, like, what's the big think piece? I don't know. Is it 2 years from now, 3 years from now, 5 years, 10, 20? Will we look back at this era and say, wow, we had a president who was really thinking about agreements that maybe weren't in the best interests of the United States and really sent the U.S. on a greater trajectory? Or do we look back and possibly say, wow, this was a moment when the U.S. really just lost its place in the world? Like, how can we start to even think about that yet?
Well, let me respond to your second point, because as someone who has worked closely with our Asian partners over decades, I'm very concerned about the message we are sending them now and its long-term implications. And particularly when a few days ago, the first letters went out to our two closest allies, Japan and Korea. Now, granted, they have high trade deficits with us, but they've been great partners, not only with respect to our security relationship, but on economic security matters, including supply chains and shipbuilding and semiconductors and export controls, and just massive amounts of foreign direct investment in the United States. It almost looks like they're getting zero credit for any of that as long as they have a bilateral trade deficit.
In your view, have any of these countries treated the U.S. unfairly?
Look, many of these countries have unfair trading practices, and they have unfair barriers that they impose against U.S. exports. Guess what? We do too. And that's why through trade negotiations, you try and get rid of those barriers. But on more, at least during my career, it was more on a mutual basis. It wasn't this kind of one-sided negotiation where we're telling the other countries, this is what you need to do, or else we are going to make it very difficult for you to access our market.
What are the implications, you think, longer term in terms of the U.S. economy because of these deals?
Well, I guess there is an optimistic note to this. I think people over time are going to recognize how important trade is and how trade has contributed to lower prices and to a greater assortment of goods and access to many goods that we would never have seen or have been able to enjoy without trade. But putting that aside, I think that, the economic fallout is going to be severe if indeed all these tariffs come into effect. But that said, as a former trade negotiator, 3 weeks is still a chunk of time for trade deals to come together. And so we may see deals coming together, by next month.
All right. And we hope we can lean on you again to make some sense out of those trade deals as they are done. Wendy, thank you so much. Wendy Cutler. She's vice president of the Asia Society Policy Institute. As we mentioned, she was also a former acting deputy for the U.S. Trade Representative and spent a long time as a diplomat, 3 decades in the office of the U.S. Trade Representative.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Nvidia making history today. The market cap topping $4 trillion. The chip maker becoming the first company in history to achieve this milestone. Ian King is Bloomberg News U.S. semiconductor and networking reporter. He joins us from our San Francisco bureau. Ian, just remind everybody how long you've been covering the semiconductor space.
Quite a long time, more than 20 years.
More than 20 years. Nvidia, more than 20 years old as a company. It's gone through many different iterations. This iteration now is the one certainly that's getting the most attention. Is this company a cyclical company because it's in the semiconductor space? Is this part of the cycle right now?
I mean, there are a couple of ways to read that. Every company in the semiconductor industry is a cyclical company because the semiconductor industry is by its nature cyclical. How long these cycles last, when they peak and trough, that's something that a lot brighter people than me try to pick and choose from, and that's how you make your money as an investor. What we can say is, just by the numbers alone, that it's in unprecedented territory. Where its revenue is, not to mention its market cap, as you just pointed out, we've never seen anything like this.
Does it make sense to you, someone who understands this industry and has followed it for so long?
I think you have to just fall back on the numbers, Carol, and let investors decide whether it makes any sense. So on a price to earnings ratio, 52 times, doesn't sound totally crazy, and that doesn't even get it into the top 10 list of semiconductor makers. So relatively, it's not that expensive. No other semiconductor company has ever had more than $100 billion of revenue ever, not even Intel at its peak.
Yeah.
Nvidia blew past 120 last year. This year, it's probably going to be closer to 200. So again, the numbers say it's achieving more than any other chip maker has ever achieved, and it's still doing that at a relatively profitable rate.
There's also a report out there, I think it's the FT today, and it's Nvidia planning to launch a new AI chip design specifically for China as soon as September, with Jensen Huang, of course, planning to a visit to reassert the company's commitment to the country. Again, I'm just reporting what FT is saying. I'm just curious what you're hearing about that, or is it also just a sign of him trying to kind of continuing to figure out his next market move and where he needs to be, and making sure he's kind of getting to all the possible customer audiences that are out there?
I think the way to look at that kind of reporting and the reporting that we've done on this area is this is the one kind of cloud on the horizon for this company, which is China is the largest market in the world for semiconductors. That country and its companies want to spend a ton of money on AI infrastructure. They cannot spend money on Nvidia chips because of the US government. So Jensen is going to probably be in Washington soon, going to be in Beijing soon. He's doing lots of shuffling between the two because he has two masters to please. One that controls what he can do, the other that can arguably pay his wages to a large extent. They were already losing billions of dollars in revenue that they can't, because they can't sell into China. So this, is symptomatic of what he has to do. He has to find a way through this, and that'll, make their growth even better than it is right now. Long term, he's saying and arguing vehemently about this, that, look, if we can't do business in China, they'll find another way to do this, and that will hurt us.
Well, speaking of China, perhaps the perfect segue to talk about today's big take. It's a Bloomberg exclusive. It's an analysis that shows how China is building giant data centers in the desert to fuel its AI ambitions. And it's looking to buy 115,000 banned Nvidia chips to power them. Ian, you were one of the reporters who worked on this piece. How is China going to get its hands on these chips?
I mean, it's very important to point out, as we do in the story, that while there is some evidence or some belief that some of Nvidia's banned products are making their way across the border, there's no evidence that enough to even constitute a sort of medium-sized data center are making it across the border. So obviously this is something we're monitoring, something that the government is monitoring, and something that, certainly Nvidia and its customers will be held accountable for. But, there's a gap between the desire and what's actually possible right now, as far as at least the reporting in that story would indicate.
I also do wonder, it just is a reminder, too, of China's own AI ambitions and what it's looking to do. And if it's not with Nvidia chips, it'll make its own, or it'll figure another way.
Yeah, I mean, there's been a lot of conversations, including by Nvidia, and they're saying, look, Huawei, before all of the actions taken by the US government against it, was a very competent company. Of course, we've slowed it down. Of course, we've made it more difficult, but it's still a very competent company. Forced into the situation that it's in, it's going to find its own way. Might take it a while, but guess what? It'll get there. Do not underestimate it, is one of the big arguments that's being made there. And, perhaps if we're not going to allow other countries, maybe they go to China.
Yeah, this is sort of the age-old question about, necessity is the mother of invention, right? If they can't get their hands on certain technology, then they can do it themselves. But a question that I ask you over and over again, Ian, when you're on with us, and it's been, I've been asking you this question for years, is about Nvidia's moat, and to what extent that the company can do something that other companies are far behind in their ability to do. Where does that moat stand right now?
I mean, it's we're not seeing any any filling in of that moat. We're not seeing anybody creating a bridgehead, to use some horrible metaphors there. I mean, companies like AMD are saying, we have competitive chips, and they're showing some growth there, and you say, oh, great. But then you just look at the sheer amount of spending and planned spending and projected growth. No sign of any slowdown in demand for Nvidia's products, no sign of anybody catching it anytime soon. I think, the longer terms, the China's situation, what's going on in terms of others trying to make their own chips, the big customers, these are all clouds that have been on the horizon for a long time, but Nvidia keeps forging ahead, so that moat still exists.
So, and go back to a quick take you did or were part of at the end of June, why world powers are sparring over computer chips. And we understand why, right? They go into everything. So is it, I don't know. It just seems like that's just going to continue to multiply, right? And so is it a case that there's just, more chip production, more chip giants kind of everywhere? Or is it that we just continue to have just a few that dominate?
Yeah, I mean, the first thing is that everybody agrees on one thing, which is underlying demand is great. Whether it's for these massive data centers, or whether it's for electric vehicles, whether it's smart devices, full stop. Demand is unprecedented, and AI is helping fuel that. Where those chips get made is open to question, because geopolitics is asserting itself. Which companies can afford to do that? Which companies can afford to design these things? That's always been the variable. Still very concentrated in the hands of a few, particularly making the kind of chips that Nvidia makes. A, producing them is very expensive, and B, designing them is incredibly expensive. So that's still likely to be concentrated in the hands of a very, very few companies for the foreseeable future.
So glad we could do this. We just felt like there was a lot of things coming at, and with Nvidia at that $4 trillion market cap, it just felt like we needed to think a little bit about that chip space and semi space. And Ian, you're always the right person to do it with. Ian King, Bloomberg News, U.S. Semiconductor and Networking reporter. Thank you. I should point out the SOX is up almost 14% year to date.
Yesterday it was up. It was like the outperformer.
It was the up.
Yeah.
And that compares with about just shy of a 9% gain in the NASDAQ 100. So really some outperformance.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
It is the Drive to the Close. Just 15 minutes ago until the close. Let's bring in Stephen Skanke. He's Chief Economic Advisor at the wealth advisor Keel Point. He's also former U.S. Treasury and White House National Security Council staff member. He joins us today from Cape Canaveral, Florida. Stephen, we wanted you on the program for a couple of reasons. One, to talk about the Fed and your experience in Washington. And that's where I want to start. Because as we learned from the Fed meeting, or the Fed minutes rather, it shows that the committee is split around inflation worries. Do you think the Fed should be concerned about inflation, or the Fed should not be concerned about inflation right now?
Well, thanks, Tim. It's always great to be with you. And clearly the Fed needs to be concerned about inflation. That's one of its two principal mandates. The
reason I ask if it should or shouldn't is because the president is not concerned about inflation, and he says inflation is gone and the Fed should cut.
Yeah, and that's great, and that's why the Fed is at least semi-independent in the way it conducts its business. And you know, it was given its mandate by Congress to be concerned about inflation and about labor markets, and that's what it's done. I mean, it's great that President Trump is not concerned about tariffs and inflation, but the rest of the economy and even financial markets are certainly have that as something that they are concerned about.
Well, I am curious too, Steve, as you guys advise your team there at Keel Point, when it comes to the economic outlook, we're still kind of waiting for all of the factors to be put into kind of the economic balance sheet when it comes to what really will be the tariff cost, right? Like we're waiting and now we have to wait even longer as President Trump has pushed off some of the tariffs or the tariff deadlines until August 1st. So we continue to kind of wait and see. But isn't it safe to have an assumption we already have a 10% tariff in place, that there are going to be higher tariffs? Or do you think net there won't be much of an economic impact, and that economic impact, of course, then won't have such an impact, a bad or negative impact on U.S.-based investments, dollar-based investments?
Well, that's a great question, Carol. And what we're seeing is that the tariff impacts are starting to show up in different places. In earnings outlook, where companies have decided that they're going to absorb some of them. In what consumers are paying. The big belief is that we'll see it in the June CPI that comes out next week, and in the June PPI that also comes out next week. Those will be first indicators. Businesses were very shrewd about building up inventories in advance of the tariffs, and so they've been working through those, and that has helped delay the impact. But I don't think anyone doubts, well, certainly no one in the business community doubts that tariffs are going to have an impact on the prices that consumers pay, to the extent that the businesses can't absorb them in their own profit margins.
What does that mean, you think, ultimately for the U.S. interest rate picture? On a day when we've seen yields all along the curve move down, what's the longer term thought for you when it comes to U.S. rates? Is it more like a 10-year above 5 or a 10-year below 4? And just got about 30, 40 seconds here.
Well, we don't see a 10-year below 4. We see it at 5, maybe not too much above that. Longer term rates are also going to be higher. And unfortunately, every effort the president makes to try to push rates down or say he's going to have a Fed chair that's going to push rates down really has almost the opposite effect. And of course, that's a concern in our outlook.
All right, we're going to leave it on that note. Steve, good to get some time with you. Steve Skanke, Chief Economic Advisor at the Wealth Advisor, Keel Point, a former U.S. Treasury and White House National Security Council staff member, joining us from Cape Canaveral, Florida on this Wednesday.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.